let's get started with today's news of the day. Remember, if you have any questions, just put them in the chat. Happy to talk about these bits of news as well as other news that you see out there. The first story is the Fed this summer will take another step in developing a digital currency. Let's look into this a little bit. Remember, just the other day we were talking about China's digital yuan. U.S. Federal Reserve is moving forward to develop its own digital currency. Central bank issued digital currency differs from cryptocurrencies because it's backed by the reserves. China's digital yuan could undermine the dollar's position as the global reserve currency, and this could speed up the Fed's development of the digital currency. Digital currency would reduce the cost of cash management and cash transfers, but on the other hand, digital currencies would increase cybersecurity risk and could compromise the central bank's main role. In addition, of course, once it happens, it means no more privacy. One of the big benefits of cash is that you can have a private transaction with no government involved. But once a digital yuan comes out, once a digital dollar comes out, that basically means every single transaction is traced. And that is a risk for people who are focused on privacy. Of course, most people don't think about it. In fact, millennials and younger people these days are willing to completely give up their privacy for convenience. And I would argue that there's a challenge there that they may learn, right? The U.S. digital currency would still need support from Congress to proceed. We'll see how that goes. I suspect it's going to be coming along. The next story of the day is U.S. proposes global minimum corporate tax rate of 15% with an eye on something even higher. And that's the point of government. They tell you it's just going to be a small tax, but once they get it in, then they start to increase it. Watch out. So, the U.S. urges to raise the bottom corporate tax rate. Treasury Secretary, I misspelled it, Janet Yellen, suggested a global corporate tax rate of at least 15%. The Treasury believes that this will ensure that the global tax system is equitable and equipped to stabilize the global economy. Yellen's proposal deters U.S. companies from establishing their headquarters outside the U.S. to reduce taxes. And this incentivizes the return of large companies back to the U.S., which could help employment and boost GDP. But truthfully, what the countries that are going to suffer from this are the countries that right now have low tax regimes as a way of attracting people to them. Ireland was one that had low tax regime that attracted a lot of companies there. So I'd imagine that there's many small, medium-sized countries that were not that interested in following the U.S. government's tax guidelines and having a minimum tax of 15%. So maybe it's the largest companies out there or the largest countries out there that decide to get together on this. Now, the next story of the day is finally Israel-Hamas ceasefire begins after 11 days of conflict. Well, Israel voted to accept an Egyptian brokered ceasefire with Hamas following pressure from the U.S. However, Israel claims that the ceasefire deal involved no preconditions. Now, during the 2014 conflict, Israel launched an airstrike against Hamas 1 week after ceasefire was established. The current conflict could escalate if Israel fires back. Of course, oil prices have been rising. This could slow that rise, but also, I suspect just more, I think actually the U.S. has a stake in kind of destabilizing the Middle East because it makes the U.S. dollar remain a strong currency or a strong option or a low risk option. So I'm watching for that. I'm also, into the commodity space because I'm worried that what we've got now is just continuing rising commodity prices. And also, it's interesting that Egypt was the one that brokered this deal. One of the problems about having a president that's really suffering real cognitive decline that Joe Biden is suffering is therefore he's not in the space there to broker that deal or to get deals done, to get ceasefires and things like that. So I was watching a comedian named Kayvon. He's a pretty funny guy. And he has a thing called LGBTQ. And what does it stand for? Let's get Biden to quit. That's what it stands for. I thought it was pretty funny. So Next story is from Asia Times. Unicorn merger shifts Indonesia's online economy. Two large Indonesian startups, Gojek and Tokopedia, have merged. Gojek, the mobility and payment platform, has merged with e-commerce firm Tokopedia to form Go2 Group. It's currently worth 18 billion US dollars and ranked the 17th highest valued startup in the world. Go2 Group are to IPO in Singapore and New York by the end of 2021. Southeast Asia tech space is highly competitive with leading rivals Grab and Sea. This merger may help to streamline the two companies' operations, which could prove Go2's competitive advantage. This could make Go2 Group an attractive investment as they plan to IPO. It's interesting in Thailand to see that Gojek has been coming into Thailand and been pretty aggressive in Thailand. So I suspect getting a footprint across all of Asia is the goal. Now, the next story is the Fed signals eventual shift from easy money pandemic policies. In the beginning of April, the Fed voted to continue buying $120 billion of bonds each month to try to keep interest rates low. However, the Fed now plans to buy less treasuries and mortgage-backed bonds because of rising inflation and also reasonable economic growth. So interest rates could start to rise, which could put negative pressure on the stock market and bond prices. However, the Fed claims they're careful not to drastically decrease bond buybacks, or else economic recovery is at risk. Now, this is an interesting one to think of. The US government is in really a bad situation. In fact, I don't see a way out. Basically, what's going to happen is that the Fed is going to say that they're going to reduce the buying of bonds. But the problem is that interest rates will start to rise. And when they do, the number one issue for the US government is that it is going to massively increase the interest costs that the US government is paying. And by doing that, you're crowding out all the other items that should be spent on, like government programs and other things like that. So basically, it's all going to interest to the lenders, to the US. And that's the reason why it's one of the biggest constraints of why the US government is trying, and the Fed's trying not to let the interest rates go too high. So they can say that they're going to stop bond purchases and all of that stuff, but in the end, they'll be back there doing it. In fact, you could argue that we've already had QE infinity. QE infinity, Peter Schiff was a guy that used to say that a long time ago. But the point is that once you start QE and once you start this level of deficit spending, you can't stop it. Who's going to stop all this spending? The Republicans aren't going to stop it. They're for big government these days. The Democrats aren't going to stop it. They're also for big government. And then you've got budgets for war and all these things. Nobody's going to stop this spending. So the only hope for the US is that we go through a period of fast economic growth over the next 5 to 7 years, and we grow our way out of this. But that's not going to happen based upon where we are at this point, from my perspective. So I fear that there's just no way out, and eventually all that pressure is going to come down on the US dollar. Now, of course, the US dollar is the reserve currency of the world, and modern monetary theory concept says as long as it's the reserve currency of the world, you can print all you want. But the fact is the risks will continue to rise for the US dollar, and whether the MMTers keep printing is a little bit irrelevant. Eventually, it's not about whether MMT will work from policy perspective in the US. It's about whether the world thinks that MMT will work for the US dollar. Once the world starts moving its currencies out of the US dollar, that will put a tremendous amount of pressure on the US dollar. And I expect that that will be the theme over the next couple of years. So, steel industry groups urge Biden to keep tariffs in place after the EU truce. U.S. steel associations want to keep Trump-backed import tariffs, which stimulated a $16 billion investment in local steel capacity. U.S. steel workers stress that there could be a further oversupply in steel if import tariffs are removed. And steel prices have increased by nearly 50% in the past 6 months, driven by strong demand. Lowering import tariffs could cause steel prices to crash and damage steel producers, but benefit steel customers. So you could play this one by owning companies that are consumers of steel, whether that's some renewable energy, electrical vehicle, or infrastructure development. Now, I think that to me, this is a pretty interesting one because basically when Trump came into office, he put up tariffs. I'm generally against tariffs. And what ended up happening is you end up distorting the market. You also raise prices for US consumers of steel. And you give too much protection for domestic companies so that they don't improve. But now we have the challenge, nobody wants to lift that. But I would say ultimately a world with less tariffs is a better, more competitive world. And the last story of the day is oil price demand set to surge. Wait a minute, oil's already rising and now demand's going to surge. What's going to happen to oil prices? Well, as travel restrictions ease across Europe, we could see a rebound in oil demand. In recent weeks, UK oil fuel sales reached the highest level since the start of the pandemic. Toll roads across France, Italy, and Spain have experienced their greatest use since 2019. High demand could result in rising inflation, and rising prices of oil is usually the precursor for inflation. Now, there's 3 different commodity hedge funds that could be interesting to play in this time. There's the Invesco DB Commodity Index Tracking Fund, iShares S&P GSCI Commodity Index Trust, and the Spider Gold Mini Shares Trust could be another one. So now we're facing a situation where oil prices, not only do we have a reduction in supply, but now we have an increase in demand. Oil prices could even go higher. Right now, my exposure on my asset allocation has been about 25% to commodities. And I suspect that probably could run another couple of months. Let's see where inflation goes. If you've got any questions, feel free to put them in the chat. So the first question for today is Robbie Jacob. So did Holland, the Dutch. Yes. Yes. Next, please expand on that. Use an incentive to destabilize the ME. I'm not exactly sure what the question is, Robbie Jacob, but I remember you from Twitter. Nice to see you. If you can clarify that question, I'll try to answer it a little bit better. Sorry about that. All right, next question. Could the digital yuan be capable of undermining the reserve currency status of the US? I think not. I think it's going to be very difficult for the digital yuan to become the new reserve currency. We're probably 10, 20, 30 years from that. I think we'll have an intermediary currency that could be related to gold. It could be related to crypto. That will be some sort of compromise away from the US dollar. And that will be the first stage. And then eventually the dollar will fall out. And then maybe the yuan. Next question. Given the saturation of mobility platforms in Southeast Asia, do you think the merger between GoTo and Tokopedia is really an attractive investment? I think that unfortunately, these types of things happen at peaks of markets and at peak times and at peak prices. So I would argue that, first of all, let's think about this for just a minute. When I look at these delivery services, these platforms, whether that's Uber, whether that's Grab, whether that's Gojek, all of these things, what they're doing, my question to you, is it really innovation? Or is it actually just driving down the labor price to the lowest common denominator? Think about it. To deliver a package or some food or something like that, what does it take a motorcycle boy or a driver of a car to deliver that? If we think about a motorcycle, basically you could say in Thailand, it could cost 20, 30 baht. That is a tiny amount of money for what could have been like an hour's worth of work for these guys. And because of the inefficiency or inconsistency of orders, they're not working 8, 12. If they're working 12 hours a day, it's because they're not getting orders all the time. And I would say that this is not a sustainable way of doing delivery. But right now, it's pushing down the price. Those drivers of motorcycles and the like don't have a choice. And these companies, these mobility platform companies, are actually financing part of that. So it's not necessarily a standalone profitable business. I'd be interested to look at the financials, and I would question whether on IPO this stock goes up or goes down. Munling says, how can Gojek enter and rival Grab in Thailand, especially since it seems like they only entered the market recently? Well, I guess that's the challenge. Ultimately, these are platform services. You've got to get the drivers or the people providing the service, and then you got to get people to use the service. And people don't want to drive or become the suppliers to the service like the motorcycle guys unless they know that the users are there so that they got a full day of work. So ultimately, Gojek's going to have to spend a lot of money to possibly pay the drivers extra to get them on the platform so they're there ready to deliver, and then do a lot of marketing to get people on it. There's a huge amount of spending that has to go on to get to that point. And I would say that that is, a big cost for this type of business and may make it not sustainable. Himanshu Goneka, do you think the Thai market's a bit overvalued, and would it be prudent to be in some cash? I think the Thai market is moderately valued. I wouldn't say that it's expensive or it's ready for a crash. I've been looking at a lot of markets recently across Asia, and the last time I looked at it, there are some markets that have just been really, really unattractive to me. Like recently, 3 months ago, the last time I looked at it, the Philippines. But I would say Thai market maybe a little bit overvalued, but I wouldn't say that it's time to go into cash. I would say, though, that it's probably worth it to diversify outside of Thailand too, not just exposure there. Next question, Ravi, do you iron prices falling in the near future? I think you're saying, do I see iron prices falling in the near future? It's possible, I don't have a strong view on that right now, I would say. Next question is, Robbie Jacob was related to the US dollar. Not really sure I still don't really get the question, so sorry about that. And do you believe the US digital currency will become more dominant than the digital yuan? I think that the US doesn't really want to do it in one hand, whereas the Chinese really want to do it, and they've got a population that's ready for it because they're all on WeChat and other mobile payment systems. So I would say that Chinese are going to issue it and adopt it much more aggressively than the US. I doubt that the US will become the digital currency that's dominant across the world. But the other benefit that the US has is that if you want to do global business, you got to do it in the US dollar, and they can force everybody into that digital currency. But I think that they're going to have to do a lot of work before they get to that point. All right, Austin, nice to see you. First time here on your podcast. I love your insights. I'm turning on notifications. All right, way to go. I hope you learn as much as I do through that. Thanks, Austin. All right, next. Nguyen Ann says, today the market is at the peak of valuation in Southeast Asia as well as cyclical stocks. What is the best way to value cyclical stocks at the time? Could we use reversion to mean multiples? So cyclical stocks are a good example of using multiples over the whole cycle. So that's where the cyclically adjusted PE ratio is an example where Warren Buffett and Robert Shiller's book, Irrational Exuberance, and also his data uses a 10-year average for the earnings. And take that 10-year average, you know that you're going through some different cycles, both peaks and troughs, and therefore you've got an average. Now, that doesn't take into consideration that generally a company's earnings are rising because you're just going to get an average of that period of time. But it's good enough to try to understand. Now, it is important to remember that you buy cyclicals when they're expensive and you sell them when they're cheap. Buy cyclicals when they're expensive and sell them when they're cheap. Why is that? Well, first of all, about cyclicals, we know they're going through cycles. So we know that when they come down, they're going to come back up. And when they're expensive, it means their earnings have absolutely collapsed and they're just making a tiny amount of earnings. And therefore, when you compare the price to a tiny amount of earnings, the PE is massive. And so we generally say buy these cyclicals when they're very expensive. So take a look at the earnings, take a look at the cycle. Be careful about that as you go through. All right, next. Come on Point says, so when U.S. interest rates increase, it's going to reduce the value. I still don't get it. No, actually, what's going to happen is that the U.S., if interest rates rise, in theory, that supports the U.S. dollar. People want to put their money into US dollar if they can see they're getting a higher and higher return. But my point is that the US government can't let that interest rate go up that high to 3, 4, 5% because it would blow out the amount of spending that the federal government is doing on interest. So the point is they can't let it happen. They're going to have to keep interest rates low. In addition, you've got a huge amount of debt now that will almost never be repaid. So people that are buying US dollars are scared that they're not going to be repaid. There's going to be a default. They just don't know what could happen. And at that point, the dollar starts to show weakness. Hopefully that explains my view a little bit better. Next question. Chris says, is it wise to bet all into commodities right now? Well, I think that's a good question. And what I would highlight with asset classes like commodities and gold, I think you need to be very careful. You don't want to put 50% of your money into these types of asset classes. They tend to be very volatile, and they don't necessarily have a great track record over a long period of time. So I would say, from my perspective, your first step is to try to judge how much money you want to have in equity, and then look at bonds, then look at commodities, and then look at gold. As far as commodities are concerned and gold are concerned, you may look at a maximum amount in these asset classes at 5–10%. For my strategy, I am higher than that at 25% commodity, but I'm watching it very closely. I'm playing a trend right now, and then I plan at some point soon to pull that back. So I would say be very careful with that. All right, next question. Please make a video about a few of your picks for the Thai market, companies that have good fundamentals for the next 4 to 5 years. That's a good point. And yesterday we did a company, this one happened to be in China, and it was a fascinating company called China Glass. Go back through the LinkedIn feed and see if you can find it, or the YouTube feed, see if you can find it. China Glass is a very interesting company. I think it has a good long-term story. It's attractive to me. I'm not recommending it, but I'm saying it's worth looking at for research. Do you think the global tax rate proposed by Yellen would really deter U.S. companies from using countries outside the U.S. as tax havens? No, I don't think so. I think U.S. companies are always going to be operating outside of America, and they're going to look for the country that gives them the best deal on taxes. Nothing wrong with that. And so I do think that they're still going to be searching for those. And I think it's going to be very hard for Yellen to be able to implement this all across the world, although it sounds like she's going to try. All right, that's the questions for the day. That's the news for the day. I hope you have a great weekend ahead. I'm going to spend some time relaxing with my mother. I hope you get time with your friends and family, and I'll see you on Monday.